and welcome to Capacit'e Infraprojects Limited Q1FY25 earnings conference call. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Before we begin, a brief disclaimer. The presentation which Capacit'e Infraprojects Limited has uploaded on the stock exchange and their website, including the discussion during this call, contains or may contain certain forward-looking statements concerning K1 Kiran Limited business prospects and profitability, which are subject to several risks and uncertainties, and the actual results could materially differ from those in such forward-looking statements. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. And I've handed the conference over to Mr. Rohit Katyal, Executive Director. Thank you, and over to you, sir.
Good morning, everyone. On behalf of Capacit'e, I welcome everyone to the Q1FY25 earnings conference call of the company. Joining me on this call is Mr. Rajesh Das, CFO, Mr. Nishit Pujari, President Finance, and Marathon Capital IR team. I hope everyone has had an opportunity to look at our results. The presentation and press release have been uploaded on the stock exchanges and our company's website. We are delighted to start the year on a high note by achieving a year-on-year growth of 32% in revenue from operations, as well as significant improvement in margins. This was achieved despite the labor migration during elections. The highest ever quarterly PAT is a reflection of our careful project selection and our execution expertise. The higher execution has helped us in better absorption of fixed costs, thereby leading to improved profitability. Over the past few years, while our order book size has expanded significantly, the number of projects under execution has reduced. This has resulted in higher revenue contribution per project site, better absorption of fixed costs, thereby leading to improved margin profile. Our efforts towards improving the net working capital cycle has translated into a reduction of 17 days in Q1 FY25 over Q4 FY24. We remain committed towards improving our working capital cycle and maintaining healthy profitability. Friends, we have embarked on a high growth profile backed by a diverse order book from distinguished clients in both public and private sector. With strong financials alongside our execution progress, we are confident of setting up new performance benchmarks in the quarters and years to come. Other key updates: the company achieved highest ever quarterly profit after tax. We firmly believe that the momentum should continue. Reduction in net working capital cycle by 17 days. We are confident that we should see healthy reduction during the current financial year. Let me now come to the consolidated performance highlights for Q1 FY25. Revenue from operations for Q1 FY25 stood at 570 crores, up by 32% as compared to 430 crores in Q1 FY24. EBITDA for Q1 FY25 stood at 116 crores, up by 54% as compared to 76 crores in Q1 FY24. EBITDA margin for Q1 FY25 stood at 20.1% as compared to 17.4% in Q1 FY24. EBIT for Q1 FY25 stood at 93 crores, up 82% as compared to 51 crores in Q1 FY24. EBIT margin for Q1 FY25 stood at 16.1% as compared to 11.8% in Q1 FY24. PAT for the period Q1 FY25 stood at 53 crores, up 180% as compared to 19 crores in Q1 FY24. PAT margin for Q1 FY25 stood at 9.2% as compared to 4.4% in Q1 FY24. Gross debt stood at 336 crores as on June 30th, 24 as compared to 326 crores as on March 31st, 2024, with gross debt to equity at 0.21. Net debt stood at 94 crores with net debt to equity at 0.06x. The company continued its focus on increasing execution across projects while improving working capital cycle. Our order book on standalone basis as on 30th June 24 stood at 8,828 crores. Further work front for additional 1,000 crores has been made available by MADA for our BDD project. Public sector accounts for 72%, while private sector accounts for 28% of the total order book. I leave the floor now open for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mohit Kumar from ICICI Securities Limited. Please go ahead.
Yes. Yeah, thanks for the opportunity and congratulations on a very good set of numbers. My first question is on this, on the labor issue which you spoke about which affected your Q1 numbers. Has this is waning out as we speak and expect Q2FY25 in the balance of the year this issue to normalize?
Yeah, good morning. So labor is a challenge across industry. It's not only for Capacit'e. So what you can actually do, the company has improved upon the payment terms from earlier a month to 15-day payment cycle for the labor force, and that has definitely resulted in some increase. So as we move forward, training and retaining the labor force, essentially through labor contractors, will be a continuous focus. And while if you say it will not be a challenge, no, it is a challenge for the industry because adequate trained labor force is a challenge across industry, especially in the building segment. But we will ensure that the full year target for the company is achieved, if not surpassed.
If I'm not wrong, sir, I think I've given a guidance of 25% growth, right?
That's right.
Yeah, understood. My second question is on the order inflow outlook. How do you think about how it has panned out in Q1, and how do you think it is looking like in the balance of fiscal? Are you seeing the increasing momentum post the election, more inquiry?
The big pipeline is strong across both public sector and private sector. Of course, there were central government elections, and then as per the CVC guidelines, you do have a blackout period. But we are back to bidding, and we do hope to achieve the target of 3,000 crores in the current fiscal, if not more. This 3,000 crores is excluding what fronts open up from BDD project of MADA and get added into the order book. I just mentioned in my opening remarks that another 1,000 crores has opened up. So effectively the order book should be read as 8,800 plus 1,000 crores.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Darshil Pandya from Fintrust Capital. Please go ahead.
Hello, am I audible, sir?
Yes, please go ahead.
So first question was already answered for the order inflow. My next question would be on the EBIT margins that we would be seeing for this year. How are you seeing this EBITDA margins for this year?
So Darshil, we have commented even last financial year that once our order execution speed improves beyond 550 crores, you will see an expansion in the margins. That's what you are actually witnessing now, because there is a reduction as a percentage to turnover in the fixed cost of the company. So there is no reason why these margins plus or minus 1% should be achievable for the full year, if not better.
Got it. And sir, the last call we discussed about this GIFT City projects. I would like to hear more on that from your side.
GIFT City project is in full flow. We expect to complete that by January of the current financial year. We continue to bid. As we speak, we are bidding for certain more projects in GIFT City area because the client and the other private sector clients over there find our quality far superior to what they have seen. So yes, we do believe that GIFT City will offer opportunity in the quarters to come, and wherever our pricing need not be compromised, we will be very happy to execute projects over there for both GIFT and for private sector.
Got it. All right, I'll get back into the queue. Thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Mukul Verma from Verma and Associates. Please go ahead.
Yeah, thank you so much for the opportunity. Rohit, congratulations on a fantastic quarter. I have two questions. One is, are we looking to expand to new geographies, specifically Andhra Pradesh, considering central government allocation to the state for development of infrastructure? And second question is, what is the tax rate that we kind of will be put into for this year? Because I see last year we had a higher tax rate. So these are the two questions.
Yeah. So, morning, Mukul. First, let me take your tax rate question. We are at 25% plus surcharge, and that would be the tax rate applicable for the full year. If there are reversals in deferred tax, the tax rate would appear to be that much lower, and when the reversals don't come, then the tax rate would look that much little bit higher for the full year. However, at the moment, answering the question is 25% plus surcharge.
Okay.
So your second question was geographical expansion. Now, you are aware that prior to COVID, the company was present in 7 cities. Now, that 7 cities basically entail about 10 to 11 states for other contractors. But we are a pure urban player working in tier 1 cities. So the company has enough experience of having executed projects and delivered on time with high trade quality across Chennai, Hyderabad, Bengaluru, Pune, Mumbai, Goa. We are working, we have delivered more than 6 or 7 projects in Delhi NCR and of course Mumbai MMR. So as I speak to you today, we are already there in Mumbai. We are in Mumbai MMR. We are there already in Gujarat, Ahmedabad, Gandhinagar. We are there in Delhi NCR, both in the private and public space. And at the moment, we are actively bidding for certain public sector projects like AIIMS and so on in Bengaluru, Hyderabad, and for central CPWD projects, apart from active bidding, which is going on in Maharashtra. So yes, there will be an expansion in the geographies, but that will, for at least the current financial year, be limited to what geographies we were servicing prior to COVID.
Great. So just to follow on, so what is the kind of, last time I remember you had mentioned that you would take order book of close to 3,000 crores for this year. So what is it that we have kind of got it in the first quarter, and what are the, is there anything to be announced in due course of time?
So whatever has to be announced will be announced in quarter 2 and as we move forward. In the first quarter, as I told you, we have received the 4th repeat order from Lodha for their upscale residential project in Worli. The work has already started. The billing has started, number 1. Apart from that, I also gave during my opening remarks that BDP project earlier where we had received the 11 towers for rehab portion. The sale towers also have been released, thereby adding close to 1,000 crores of executable order book. You are aware that our scope in BDD, including escalation, is close to 5,500 crores or thereabouts. All right. So far, only 1,200 crores was included in the order book. Now that inclusion includes another additional 1,000 crores, taking the total order book of BDD to 2,200 crores or thereabouts in our executable order book. So you have to remember that in quarters going forward, we still have to realize executable order book of close to 3,300 to 3,400 crores from BDD, apart from the new orders which we take. So our guideline is for new order intake of 3,000 crores in the current financial year, and I don't see any reason why we shouldn't achieve that.
Superb, sir. Congratulations, and I'll join back in the team. Thank you.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Rikin from Capri Global. Please go ahead.
Hi, sir. Thank you so much for the opportunity, and congratulations on a good quarter and execution on the balance sheet as well. So first question is on the order inflow guidance that you've mentioned. So what we are indicating is X of the potential addition of 1,000 crores in the BDD order, we would look at 3,000 crores of inflow, and if BDD happens, then it could be 4,000. Is my understanding correct?
Correct. The only correction is that MADA will not happen. It has already happened.
Okay. So 1,000 has already happened, and we are looking at a total 3,000 additional order inflow that we expect during the year. And in terms of mix basis, the current bidding that you have, do you see a similar public versus private inflow in this 3,000 crores?
See, please try to understand. This is a very dynamic thing. We continue to bid for good clients both in private and government sector. And a win of private sector, let's say you'll end up getting an order of 500 crores, let's say next month, then suddenly that percentage will change. But ideally, we would like to maintain that somewhere between 70-75 to 25-30 levels. Simply because all the government projects now have become EPC. That gives us an opportunity to exercise our engineering expertise and therefore improve upon the margins. As far as the private sector is concerned, yes, we are working for all the top 15 developers across the geographies where we are present. So if you talk about Delhi, Godrej, M3M, DLF are our clients existing. If you talk about Mumbai, you think about a good name, and they are there with us as our clients. The positive part is that we have delivered to each of these clients. It's not that the delivery will happen in future, and most of these clients basically will end up getting repeat orders. Similarly, though we do not look at Bengaluru from the private sector perspective, as I mentioned, we will be bidding for certain government, central government funded projects in Bengaluru and going forward in Andhra as well. So I do believe that there is a serious momentum just on the horizon, and I think we are not anything more than 2 or 3 months away from there. Where at least you would have opportunity to choose and bid for more than big packages of more than 2,000 crores per month. So yes, answering that, this is the strategy, and this is what will translate into order book of 3,000 crore apart from MADA. Out of this 3,000 crore, 250 crore from LODA has already happened. But then, as seen in the past, the company has always surpassed its projections as far as order inflows are concerned. The only thing which the company would like to ensure is that there is no need to go and bang our head and reduce our overall profitability in a bid to just win orders. So this is what the strategy of the company has been. I have been repeating this for the last 8 quarters, and the company is now showing results from Q4 of last financial year and has continued that momentum in the first quarter of the current financial year, and which is expected to grow and improve upon.
Got it. Got it. So just one follow-up on the order inflow. So do you, given that largest state is Maharashtra, where you would see a state election, would there be any impact or slowdown you envisage for the order inflow, particularly from the public sector, for that period, or you don't envisage that taking place?
So yes, there will be no bidding 40 days prior to the election dates, and I do not know what election dates, whether they have been announced or not. So you will have a 60-day lull in the public sector in Maharashtra. However, whatever bids have been submitted, I expect that they should materialize either way before the code of conduct is put in place. However, that is only for Maharashtra. Central PWD, Andhra Pradesh, public sector healthcare projects in Karnataka, and the other geographies where we are operating, that will continue unhindered. We have to appreciate that the central government, only 60 days back, the government has come into place. So you will see a lot of traction in the central PSUs and central government projects in the months going ahead.
Got it, sir. So one question on the working capital front. So you did outline in the presentation the improvement that you achieved in the current quarter. If you could outline what have been the areas that have driven this improvement and your guidance for the full year in terms of how working capital could shape up for us.
So firstly, we have collected more than 100 crores of retention over the last 9 to 10 months period due to ample availability of bank guarantee limits. Now the company already also has access to surety bonds, which all central PSUs accept in lieu of bank guarantees. That's number one. Number two, the company has increased its revenues while maintaining the debtor levels. So the point is that, which means that the number of days as far as the revenue, with respect to revenue is concerned, has reduced as a percentage to the top line. Going forward, we see this trend to further strengthen. And thirdly, our old stock monies like IGIMS, 50% of that has already been realized in the quarter one. We believe that the balance 50% will get realized in the quarter two. All the projects which have been handed over, delivered, we do believe that the retention and the final bill payments will come through in quarter two and more so in quarter three. And therefore, all these things are huge positive for the company. Lastly, whatever ECL and bad debts the company had taken over the last 3 years, the company is in possession of real estate, and it has given to a professional firm for disposal of these real estate assets. And we do expect about 60 to 70 crores of cash flows coming in from there in the remainder of the current financial year. So all these put together, whatever 17 days reduction you have seen, that's the past. I do believe that there is another scope for 20 days till 31st March 2025. Now, that means an overall reduction of 37 days is what we are committed to do in the current financial year and go on improving over the next fiscal as well.
Understood, sir. Great, sir. That is very encouraging to hear. Thank you so much and all the best. Thank you.
Thank you very much.
Thank you. The next question is from the line of Vikas Agarwal from Parachute Capital. Please go ahead.
Yeah, hi. Thank you for taking my question, and congratulations, Mr. Kartial, on a great set of numbers. And my question is, other questions have already been answered related to order book, and current question is related to our, credit rating. So where we are, today in terms of getting that upgrade?
You see that we will be distributing our quarter one numbers along with reduction in working capital cycle and whatever bank sanction has come. At the moment, the company is totally focused on ramping up its execution to achieve targets or surpassing those targets. So I do believe that rating will happen in due course. However, the bank limits are in place. The company is doing exceedingly well as far as the execution front is concerned. So I wouldn't like to put a timeline of 15 days or 20 days, but it should happen sooner than later.
Yes, okay. Thank you, and best of luck.
Thank you.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. The next question is from the line of Parvez Qazi from Nuvama Group. Please go ahead.
Hi, good afternoon, and thanks for taking my question, and congratulations for a great set of numbers. So just wanted to get an update on the two big projects that we are doing, which is MHADA and CIDCO. You already said that in MHADA, we have received some additional work front. So for the balance 3,000 odd crore, when do we expect that to become available to us? And also, what is the kind of revenue, let's say, which we did on the MHADA project in Q1? And something similar status update about the CIDCO, what is the work fund available, and what is the kind of execution that we have done in Q1, and what is our expectation for FY25? Thank you.
Yeah. Morning, Parvez. So, Parvez, on MHADA front, we earlier had 1,200 plus to 1,400 crores of order front available. The company has executed in Q1 approximately 134 crores of work, out of which 100 crores is certified sales and 34 crores is accrued sales accrual. Similarly, on CIDCO front, the company has done certified sales in excess of 64 crores. We believe that the momentum of CIDCO will be exponential. We have close to 2,400 crores of land available to execute the project for execution, and we believe that in the current quarter we should be close to about 100 crores in CIDCO, and from next quarter onwards we should be in excess of 150 crores in CIDCO alone, further improving in quarter 4. Now in MHADA project, we expect the sales tower value of each being in excess of 650 crores starting from December onwards. Once this, and we already have received the land availability, so the piling will start. These are heavy piles. These are buildings in excess of 300 meters, require serious preparatory work which has started, and we should start the work by December. So you will see that there will be an expansion, and we will be in a position to build minimum 140 crores plus price variation starting from December, January onwards in MHADA as well. But the traction is not only in these two projects, Parvez. Across our Bhandup Hospital project will see seeing serious traction. JJ Hospital, we are billing 20 crores per month. So my philosophy, which we used to talk about earlier also, Parvez, that if we have 25 projects and each project can give us excess of 10 crores revenue, that is how we are going to do to 3,000 crores, or we are going to do 3,500 crores. That is simply panning out now, and that is what you're seeing in the execution happening.
Sure. Thanks and all the best for future.
Thank you.
Thank you. The next question is from the line of Rolita from Hindustan Construction Company. Please go ahead.
Hi. I wanted to know who are your top clients and their percentage contribution to your revenue. And you said you've got repeat customers like Raymond, Godrej and Lodha. So how does their profitability compare with each other?
Could you repeat the last part of your question? How does their profitability?
Yes. Compared to clients, like you said, you have repeat customers of Raymond, Godrej, Lodha. How does their profitability compare with each other to the project?
So Ronita, I will not be able to compare my clients. I don't want to upset any of them. We hold them in high esteem, and it would not be appropriate for me to comment on their profitability. If you are talking about our profitability with respective clients, again, that is...
yes, I'm talking about your profitability.
So that is business, madam. We cannot say the different ranges of profitability we charge from each client. In the private sector, it's more on invitation basis, and repeat order means the client is happy, willing us to pay that little bit extra for getting that performance and the quality which they are now used to from Capacit'e. Public sector, obviously, as I mentioned, now the whole thing is EPC. So therefore, you see bigger players competing in the space where the project sizes are 500 crores and more. We continue to be one of them And if you look at pan-India level in building sector, which includes hospitality, includes healthcare, includes infrastructure like stadiums, so on and so forth, or super high-rise buildings from government as well. We are one of the prominent players, and being EPC and and competing with likes of L&T, Shapoorji, Ahluwalia, I believe that all these are mature companies, and it is not a competition which you would see in other infra segments. So it is more mature competition, and whereby which is getting reflected in the profit statements coming quarter-on-quarter basis. But if you ask me to define the profitability on the private sector client-wise, I'm sorry, that will not be possible.
No worries. I would like to know who are your top clients in the private sector and their top percentage contribution to revenue?
So the top clients at the moment from order book perspective would start with Raymond's. The entire Thana project current order book profile is more than 1,500 crores, of which 700 crores has been executed. That is followed by Godrej, followed by SBUT, Sefi Burani Trust, and all these are repeat clients that has to be remembered. Apart from this, Lodha is our client from 2012 onwards, since the company was incorporated. We have executed 3 projects and delivered, including the Trump Tower. And the Worli project is a high premium project, which is the 4th repeat order project. Similarly, from Godrej, this is the 4th project. M3M is a new client for the company. The company is executing a project of 550 crores or thereabouts in Noida for them. So many more. Oberoi, we have delivered 3 projects. We are in line to deliver the 4th project, that is OGC Tower 1 and 2 by March 25. We are executing projects for DLF in Goa. We have completed 2 towers for Piramal, Mahalakshmi, their most premium flagship project. The 3rd tower is under execution and nearing completion. Apart from this, Prestige, we have Mr. Atul Ruya Group, Phoenix Mills, Phoenix Market City, Raheja as our clients, and we continue to bid for their new projects. So it's an ongoing process, but I must have taken names of the most reputed private developers in the country. On the government side, we are working for MADA, CIDCO, the richest civic body, MCGM. We are working for Department of Telecommunications through an escrow mechanism with BSNL. We are working with PWD, and this list will increase. We have added IOCL as our esteemed client, and of course Gift City. So long list of clients, which is only bound to increase and improve further.
Great. Thank you so much.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Aldrin Viegas from Ginanath Research Analysts. Please go ahead.
Yeah, hi sir. Thank you for the opportunity. Firstly, my question was with this quarter full of rains, and could you give us a target for Q2 as well as for the full year PAT guidance?
You have seen the margins pan out in quarter 3 and quarter 4. Isn't that sufficient, sir, to give you a guidance for the year? Now the point is, our historic guidance has been at 11 to 12% of EBIT and PAT levels of 5.5, 6. But increase in revenues are reflecting the expansion in the margins, and we do expect that to continue for the whole year, especially in quarter 3 and quarter 4. You have to remember that quarter 2 is always marked with monsoon stoppages, but yes, we do expect the whole year guidance to be in line with what you have seen in quarter 1.
Okay, sir. Thank you. That was helpful. All the best.
Thank you.
Thank you. The next question is from the line of Anupam Gupta from IIFL Securities. Please go ahead.
Yeah, afternoon, sir. Just continuing on the previous question, if you can just give a better picture of why the margins have expanded in the first quarter, and is there a mixed effect which is playing out, or any specific thing which is aiding margins for you?
Two things, one thing, as I told you, there has been an expansion in revenues. Expansion in revenues, anything beyond 550 crores, obviously reduces the fixed cost of the company, whether it is finance cost, whether it is staffing cost, whether it is all the indirect expenses that the company incurs. So one reason is that there is an expansion in that. Secondly, you will see that the cost of consumption of material and construction services has also fallen in proportion to as a percentage to the top line. This is a simple reason that more revenue from EPC projects is coming into play now. And I have always maintained that as and when this happens, you will see an expansion in margins. So even for the remainder of the current financial year, you will see serious revenues, higher revenues coming from these EPC projects, whether it is Cidco, MARA, whether it's MCGM hospitals, all PWD hospitals. So we do see significant improvement, which has already got reflected in Q4 of the last fiscal and Q1 of the current fiscal to continue. Now, yes, there may be a certain blip in the Q2 because of monsoons. That cannot be ruled out. But as I told you, it will pan out, if not better, because you will see, maybe let us put it this way, that the investors at large will be positively surprised by our growth in Q3 and Q4.
Okay. Second question is, in terms of order inflows, so incrementally, what is the target? And within that target, what is, let's say, how much of government orders will you want to take, given that those are pretty good quality orders, at least, which we are seeing right now? So what is the view there?
So private sector is always on invitation. So we will pick and choose which do not negatively impact our overall EBITDA or PAT projections for the year and the next 3 years. That's number one. Number two, as far as the government sector is concerned, we will continue to work with quality of the clients like we are working for today. We are very eager to add CPWD, and we are very eager to add those projects which the central government has funded, whether it is through PSUs or, for that matter, projects which may come up in the state of Bihar or the state of Andhra Pradesh, which will be funded by JICA, guarantee for which has been taken by the central government, JICA or ADB. So these are the projects which we would like to participate in. Having said so, I believe that the contribution from public sector will be close to 70-75%, and the remainder coming from private sector.
Okay. Third question is, pardon me, I wasn't there in the first part of the call, but what is your guidance for revenues for 25 and 26?
So 25, we have already given a guidance of 25%. First quarter has panned out quite well.
Right.
We see that will continue for the remaining of the financial year. So 25% minimum improvement year on year is given. I don't see any reason why we shouldn't exceed that substantially. And while the guidance has not been given, we have already said that we will grow by 25% CAGR from 23-24 onwards for the next 4 years. So 1 year has gone, we have grown by that number, and another 3 years we will grow on an incremental base at minimum 25%, if not more.
Okay. Do you see any risk to this, especially from labor, because multiple avenues have highlighted labor being a very big constraint for execution? Do you see that as a risk for you as well?
So we have addressed a certain part of that. And as I speak to you today, we are 90% manned across projects. Manned in the sense the labor force, and because it's monsoons and elections, central elections behind us, West Bengal elections not coming up this year, Bihar elections happening next year. So for the current part of the remaining fiscal, I do not see that as a challenge for us. We have improved their payment terms from earlier monthly to every 15-day cycle. All right, so that's helping us retain more and more workforce. That's part number one. Part number two, since we have significant revenue is now coming from EPC projects in the public sector. In a pure shell and core business for the private sector, the labor requirement is much higher. It's a normal thing because you're doing only the RCC works. As opposed to this, when you go to government, a contract is only 40% RCC and finishes, and the remainder gets into HVAC, electromechanical works, building management systems, and so on and so forth. So therefore, the revenue to the labor force deployed is higher in EPC projects, and that is why we are very confident this time, because nearly 70% or more revenue would come from public sector clients.
Okay. And one last question. You have given your cash PAT. Is it possible to share your cash flow from operations for this quarter if you have that number?
I don't have it, but I will tell Mr. Amit Porwal to forward it to you.
Okay. So just let's say if you can give me a qualitative picture there. You have mentioned that your working capital has come down by 17 days.
Yeah.
Does that also include the unbilled revenue and the uncertified revenue part?
Yes, overall, total.
Okay. Understand. That's all from my side, sir. Thank you.
Welcome.
Thank you. Participant, you may press star and 1 to ask a question. The next question is from the line of Sanath, an individual investor. Please go ahead.
Good afternoon, sir.
Good afternoon.
Sir, congratulations on the good set of numbers. So my question is, whatever the guidance you have given, 25%, I feel this is a conservative number. Given the orders we have, I feel 30 to 40% growth is possible in this financial year, what I feel. Is it safe to assume, sir?
Sir, I have given you a guidance. Earlier we never used to give a guidance. Now we have started giving guidance. We never shied away from giving guidance even when the company was not doing too well. We appreciate that the investors have stood by us and believed in what we've mentioned. Anything above this should be treated as a sweet dish and our gift to the investing community.
Yeah, because whatever the numbers we have posted is very good numbers, and basically this H2 is better than H1. And in the earlier call, your target is to reach 800 crores per quarter. So if we hit that 800 crores in the quarter 3 or quarter 4, mostly our revenue may reach more than whatever the target we have given. Is it right, sir?
Sir, I just mentioned that projections are given on conservative or what we can achieve. Now, whatever improvement you say or you believe, I will not deny that, but we will please comment on this in quarter 3. Because quarter 3 will set the tone not only for the current year's full growth number, but also will set the tone for what the company will 100% achieve in the next financial year.
Okay. Sir, one more last question. You have mentioned that you are offering you are working in hospitality sector. Whether we are giving services to AIMS Telangana region?
AIMS where?
Telangana.
No. See, AIMS is setting up hospitals across India. So it's not that whether we will focus on Telangana or Andhra or Maharashtra or Delhi NCR or Patna, Bihar, wherever. Wherever the project comes and we qualify for that project, let's say 500 crores, 600 crores, we will definitely participate. It's a competitive bidding. So basically, the success ratio is between 18 to 25% because there are a limited number of qualified players in buildings and hospitals. So this will continue. At the moment, we have already completed Varanasi. That holds the record for the fastest completed hospital in the country. We are executing 3 hospitals as on today. and we hopefully should be able to bag a couple of more hospitals in the current financial year. So that sector will definitely be at least 15 to 17% of our overall order book.
Okay. Sir, one last question. So we have any limitation to participate in the tenders of above 1,000 crores?
No, we have already got 2 orders, one in consortium with Tata Projects of 11,700 crore and one project of 4,200 crore. All right. So it will depend on project to project, state to state. The qualification criteria is set up as per the CBC guidelines by the consultants and the client. So we have very little role to play in that.
Okay. Okay. Thank you, sir.
Thank you.
Hello.
The next question is from the line of Faisal Zubair Hawa from HG Hawa and Company. Please go ahead.
Sir, with the number of real estate projects going up in Mumbai, are we seeing some competitive intensity reducing within the contractors, and are many real estate developers actually, agreeing to your increased, contract needs as well as your increased rates?
Mr. Hawa, I clarified this last quarter also to you that we will work with our margin profile. There is no need for the company to compromise on its margin profile, given our order book, and also the fact that nearly 3,500 crores is yet to get added from MHADA project, which is already under our belt, and this 3,500 is our scope of work, isn't it? So the point is that whichever clients in the private sector are agreeable to award work at our margin profile, we will definitely do work for them. Number two, you're aware that clients like Raymond's and M3M have not taken any guarantees from us, neither performance guarantee, neither advance guarantees. So we would like to push for certain contracts like of this nature, where the company's financial exposure is the least exposed, and we can have a better margin profile. So we will look at all aspects. But yes, as I told you last time also, the margin profile in super high-rise buildings in Mumbai MMR region has improved, and so has it improved in the Delhi NCR region.
So our bargaining power, in short, is a little better now.
Sorry?
So our bargaining power now with private developers is little better now.
They are our clients. There is no power in this. We are always very submissive. So I do believe that the clients also appreciate that if they need good contractors, a little bit higher price does not harm. In the long run, maybe if a good contractor is executing their project, maybe their marketing options also could improve. I'm not saying that it will improve, but I'm sure that they will be able to share a little bit of their overall margins with that.
Plus, if we have really proved ourselves time and again to them, they can waive a lot of these guarantees from us in terms of bank guarantees, etc. So this is a fair ask from your side. Thank you very much. It's been a great, time really, investing with you and seeing the whole company through so many problems and yet overcoming them so well. Many congratulations as well as appreciation to you, sir.
Thank you very much, Mr. Hawa. Thank you for standing by us.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Mukul Verma from Verma and Associates. Please go ahead.
Raji, can you throw some light on the 700 crore data center bid which you mentioned in the last con call?
Mukul, that has got extended because of election in central government earlier. So we have given our extension. I should be better placed to inform more on this maybe over the next fortnight or so. But yes, we are.
Okay. And just to confirm on that additional depreciation what we are charging due to change in accounting policy, that would kind of get over by this year, right?
Yes, we already are down. You see that depreciation has fallen. So whatever I told you in December 24 quarter, that is panning out exactly of what I told. The depreciation will fall, and therefore you should look at EBIT. And
okay. So it's fallen from.
Sorry, please repeat.
Q on Q it has increased, so that was the thing.
It has increased?
Last quarter, Q on Q it has increased.
Yeah. There is a slight increase, sir. So it's very clear that the site establishment, which was 265 crore as on 1st of April 22, stands at close to 100 crores as on today. So you have already written off depreciation of 165 crores of the site establishment or temporary structures contained in the financials, and this should get written off over the next 4 quarters. If you remember earlier also I said by June 25, that is in 8 quarters, this will not be there, maybe 10-15 crores here and there.
Okay, sir. Thank you, and all the best.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Vishal Mehta, an individual investor. Please go ahead.
Good afternoon, sir. Thank you for giving me the opportunity, and congratulations on a very good sets of numbers, sir. Sir, I have a few questions, sir. In the last quarter, we have mentioned that we have 250 crores of bank guarantee limits and incremental of 111 crores of sanction was there in the plates. So just wanted to check with that, do we require additional bank guarantee limits for the additional 3,500 crores of orders which we are bidding for this financial year? If you can give some guidance on that.
So we are already armed with free limits of 250 crores available with us. Okay. And that is good enough to take care of the next quarters. Further, you have to remember that bank guarantees are issued and they are received back also. Okay. So we do believe that there will be overall availability of 350 crores of bank guarantee limits, excluding CIDCO and MARA, for the company to expand its order profile and also to issue for retention guarantees. Because just you are aware, on quarterly basis, our bank guarantee limits come back also once the advance is recovered.
Okay. And one more question, sir. Suppose if you bid for, say, X crores of order, so how much do we receive out of it? What is the conversion ratio of the order book?
So I just mentioned the conversion ratio could range between 18 to 25% in government, and private sector, you see, it's more on invitation basis. So we continue to bid for private sector clients on case-to-case basis, which I have already expanded and elaborated a lot on that. And in the government side, I told you there is enough opportunity to bid for projects of 2,000 crores month-on-month basis. And therefore, the guidance of fresh order book at 3,000 crores, apart from MARA project, in the current financial year.
Okay. Thank you so much, sir, and all the best for future. Thank you, sir.
Thank you. The next follow-up question is from the line of Parvez Qazi from Nuvama Group. Please go ahead.
Hi. Thanks for taking my follow-up question. Just wanted to check what is the capex that we did in Q1 and what is the target for FY25?
So the target, Parvez, we continue to be conservative on the capex. The overall 28. The total additions to our was about 28 crores in Q1. All right. And we do expect to restrict this figure to about 65 crores for the full financial year. So typically what one used to see till 2023, 120 crores. We have brought it down substantially less in last year, and that will continue in the current financial year as well. And I just wanted to clarify, it is there on the line, this 28 crores includes the purchase of office for the company at Shrikant Chambers, 5th floor. So the core asset addition is only 18 crores.
Sure. Thanks.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. The next question is from the line of Amit Agicha from HG Awar & Company. Please go ahead.
Hello, good morning. Am I audible?
Yes, please.
Thank you for giving the opportunity and congratulations for the good set of numbers. So my question was with respect to cost of borrowings, because in March 24, the interest which is shown as 96 crores on borrowings of 330 crores.
Yeah, go on, please.
Hello?
Yes, please.
My question was with respect to the cost of borrowings, because in March 24, the interest total was shown as 96 crores on borrowings of 330 crores.
So please try to understand that this interest includes interest from on mobilization advance from clients wherever applicable, like in MCGM, number one. This includes discount charges paid on LC for purchase of material, and it is not necessarily attributable to only the CC limit or the gross borrowing which you see of 330 crores. Okay.
So what does this cost of borrowings actually?
This also includes commissions on bank guarantees issued, which are to the tune of nearly 1,500 crores by the company. So there is a clear-cut bifurcation, and you may approach our IR team if you need any clarification on it.
Thank you, sir. Thank you.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. A reminder to all the participants, you may press star and one to ask a question. As there are no further questions, I would now like to hand the conference over to Mr. Rohit Katyal for closing comments.
I would like to thank once again all of you all for joining us on this call today. We hope that we have been able to answer your queries. Please feel free to reach out to our IR team for any clarifications or feedback. Thank you and see you next quarter.
Thank you. On behalf of Capacit'e Infraprojects Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.